Marc Faber, editor and publisher of the Gloom, Boom and Doom report, joins us with his views. Marc, it's great to have you on the show. Thanks very much for taking out the time. We would like to start with your outlook on world markets, but since we are going with our campaign of Rise with India, I have to take your views on our homeland first. What's the call that you're making on India? Because you have been bullish, very bullish of late.
As you know, I have been relatively positive about India for the last 12 to 18 months. I have applauded the Reserve Bank of India for keeping interest rates relatively high and stabilizing the currency. And since then, the Indian market has significantly outperformed other markets. It's the second best performing market in Asia after South Korea, which is surprising because South Korea has the potential of getting involved in a war. But nevertheless, it's been the best performing market in US dollar terms. Now, the Indian market, if you look at the composition of the index, the leading stocks are relatively expensive, frequently over 50 times earnings. And so I'm not that keen on the index anymore. But I think that within the market, there's still some sectors that are relatively attractive. And I still maintain what I maintained for the last 1.5 years, that India would outperform the US over the next 5 to 10 years.
Marc, lovely having you with us on the channel. Now, you've said on record that you want to invest in India over the next 10 years versus investing in the United States. So what would your bullish outlook mean for the market levels? Where exactly do you see the Sensex and the Nifty in the next 10 years? Because at the end of the day, the markets do reflect the underlying health of the Indian economy.
Well, I don't know where the market will be in 10 years' time, because that will depend a lot on monetary policies around the world and also on monetary policies in India. If you have a weakening rupee, the market will go up, will adjust more on the upside than if you have a strong rupee. But in general, I think the trend will be up, whereby, as I said, we had a very big move this year. And in my opinion, the market may still go up in a kind of a bubble stage where some stocks go up vertically, and then we'll get a significant correction. But my view would be that investors around the world should own some Indian stocks and have some exposure to the Indian economy.
Is a large part of the 10-year rally tied in with a high chance of political stability and policy consistency, with regards to the Modi government being re-elected for a second term, or perhaps, stretching it out to even a third one?
Yes, I suppose that he will be re-elected. But it's not guaranteed. Nothing is guaranteed in this world. But I would assume that he embarked on reforms and he's been reasonably successful. And the economy, I think, still has a vast potential, considering the low level of economic development you have in the countryside. So I'm reasonably optimistic about India going forward.
Right. Now, in the short term, you expect the markets to be risky. With the Nifty now at a 5-digit index and valuations of 21 to 22 times, how much more upside do you see for the markets before we actually see a material correction kicking in?
I explained to you that we may move now into kind of a bubble stage where some stocks go up very strongly and that we then have a meaningful correction. This is what I explained to you.
If you're calling for a correction in world equities, what will lead to that correction, Dr. Faber, in world markets, and what kind of sell-off in percentage terms are you expecting? Would it be the kind of, shocking crisis sort of step back as we saw in 2008?
Well, the globe is divided between essentially super bears and super bulls. I belong to the super bears, but I have equity exposure because if you think it through and you're very negative about the world, then you don't want to hold everything in cash. But basically, since 2009, we have not reduced but increased the debt level. And we have, in addition, created a rise in inequality. The inequality benefits the very wealthy people, but the wealthy people, as a percent of their asset, do not spend a lot of money. And so the economy, in this environment of increased wealth inequality, is not performing particularly well. So the markets have gone up substantially. We have an asset bubble driven by credit, and obviously the markets have become quite vulnerable. Having said that, if I look at markets around the world, what is striking is how expensive US stocks are compared to European companies, and especially compared to companies in emerging economies. So I think I would prefer to own international equities, European stocks and Asian stocks compared to, say, US stocks.
Always lovely having you with us on the show, Marc. Thank you so much for giving us that conviction as well as your views on the overall Indian economy, how you're very bullish on the markets, maintaining there that the Indian markets are going to outperform.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.